Hey, what's going on, everybody? Today I'm going to be looking at just kind of a short explanation of my trading strategy, what I look for, what I do on a day-to-day basis, kind of what um, you kind of need to know if you're joining up in my Discord, just to kind of learn how I trade, stuff like that. So, um, hopefully it doesn't take too long, but did just want to highlight a little bit, about what I do and see if we can't make things go a little bit faster for people that are just joining up. So essentially, I'm not sure if you heard of ICT before, but ICT is what I trade. Now, I don't trade all of ICT. There's order blocks, like breakers, fair value gaps, inverse fair value gaps, a ton more. There's a lot of stuff. New day opening gap, new week opening gap. There's a lot of stuff you have to look for, a lot of stuff that he has in his trading plans and things that you need to keep marked on your charts. I really don't do anything but liquidity and inverse fair value gaps. Um, and so I do bias videos every day on YouTube. This is also going to be posted there. So if you happen to see all of my live videos, those are daily bias videos where I'm showing how I do this, but I can kind of go over it just in this video as an explanation. So I start off on the weekly. There's really nothing here for me to look at besides this weekly fair value gap up here. This is the fair value gap, by the way. Fair value gap is an open space in a 3 candle sequence. So if we look at, where's the replay button on this? Replay trading, launch bar replay. Okay, so boom. This 3 candle sequence right here, 1, 2, 3, in the open space between the third candle's high and the first candle's low in this instance is the fair value gap, which is right here. Now, this is also a fair value gap right here because it's the distance between the first candle's low, or the first candle's high, and the third candle's low. So there's a fair value gap right here. Now, this fair value gap has been, well, not yet inversed, but it looks like it's going to be inversed. Inversing a fair value gap means closing that's there created and then candles close below the fair value gap. So an example of a fair value gap not being inversed is this one. This one right here, this weekly fair value gap, we came down. We did not close below it. We traded pretty close to below it. You can trade as low as you want, but the candle has to close below it. And this works for all time frames, not just the weekly. This works all the way down to the 1 minute, the 30-second, the 15-second, the 1 second. It's just the basis of trading for me is fair value gaps. I look for these. The reason I look for these is because within fair value gaps, there was no opportunity for sellers to sell in this case or buyers to buy in this case. So in this case right here, there's no buyers that were able to buy right here if we look at it on a weekly time frame. So I would expect us to, at some point, retrace back up here if we're continuing this way. Or if we're going to go that way and continue higher, well, we're going to go through it anyways. So that's what I look for is inverse fair value gaps. Now, there's another thing about it. This one really, I guess this one would be considered an okay one because there's an order block right here. An order block is a 3 candle sequence, just like this is a 3 candle sequence, except it looks like a sandwich. So this is an order block right here. This means that institutions likely got into this area, went long. They were buying. They had let the market do its thing, come back down and retrace, and then they bought again. And that sent it higher. But I look for single leg fair value gaps. So in this instance, that's like a okay one. This would be a great one if we reversed. Is that on my screen? Like that. If we reversed right here and got a candle, let's say like this, that would be a great. You'd long this. You'd target this high right here. So that's the fair value gap. That's an inverse fair value gap. Inverse fair value gaps are how I trade. So as you can see, we have not gotten that kind of close back above here yet. So the market hasn't gone any higher. We've traded into it though, but we haven't inversed this fair value gap right here that I just showed. So today was kind of a crappy day, and you can see why we're stuck between this one and like I don't even know what's down here. I guess one of these maybe, but we already took this low too. So it's the other thing, liquidity. Right now, the liquidity points for me would be this high and this low on the weekly. But I'd probably look a little bit lower. I'd probably look at this one too, since we already took out this level right here. So these would be the liquidity levels that I'd be looking at in NQ right now in the weekly. So that's liquidity. That's how I look at it. It's basically just the highs and the lows. If there's a high within a fair value gap or a low within a fair value gap too, I'll take that as well. But someone asked me, and this is kind of the main reason I was making the video. They said, well, what's the difference between, isn't one more accurate, the 1 minute or the 5 minute, or, doesn't the 5 minute, the higher time frame, give more accuracy to where the market's going to go? I would say yes, that the higher time frame does give you a better idea of where the market's going to go long term. But short term, it's a lot of time on that candle. On a 15-minute or 30-minute or an hour candle, there's a lot of time for the market to do things differently. So I'm trying to give an example right here, but what I look for is single leg fair value gaps. And so I'll change time frames to find the best fair value gap. So I'm looking, I'm gonna have to go back somewhere good. Okay, maybe down. Where's the price? Yeah. So this would be a good example. Right here. I don't know when this happened. I don't know what it was, but this is a great fair value gap to take. I'm going to draw it out. That's perfect. That's fantastic. It's a great fair value gap. If we inverse this, which we did right here, you'd long, stop will go to break even at this high. You'd target whatever, how many points you wanted, and then, you'd aim for this probably is what I would aim for, or maybe all the way up here. So it looks like it did eventually hit. But this could have been like 2 candles like this. If you move right over here, you'll see that this is 2 candles right here. See that? That's 2 candles. You don't want to take that because it isn't singular. There's an option right here that you could use, or there's an option right here that you could use. So which one do you use? Well, you could probably go on, we're on the 1 minute right now, you could probably go on the 2 minute and there's going to be one singular leg here. But it also might have just been there might not be one at all either. So that's what I mean when you do, that's why I switch time frames. I couldn't, I don't have I can't show you the 3 minute on this because I'm going to have to go really far back, but maybe I'll see if I can find it real quick. Yeah, right here. Come on. So you see this now, the 3 minute. If you're on the 3 minute, if you're on the 5 minute, you missed that trade. And that trade delivered pretty well. I mean, if we look at this trade, if we take that off the 1 minute, and you enter right here, let's say you enter right here on the 1 minute. Your stop loss is probably about 27 points, but you can aim for 61 and it hits, right? You gotta scoot it over, you gotta scoot it over a little bit, but it does hit eventually. So that's like, you miss this trade if you're on the higher time frame. So I go on the 1 minute, I go on the 30-second, I go on the 2 minute, and I stick on those because if I see something, like for instance this. On the 3 minute, this is 2 candles, right? So we're thinking to ourselves, we probably, which one do we use? Maybe we don't take it. Well, if we go to the 5 minute, it's probably going to be 1, and it's going to be nice, but it doesn't, you see it doesn't work out, but, you get the idea. Where did I put that? I don't know where I put it, but anyways, yeah, you get the idea. Oh, right here. See, I can tell that was a 5 minute. Look at that, perfect. So you get the close over, and you take the trade. You target here. Your stop loss is here. Now this is a loss, but 39.45, the risk, the reward's still pretty good. And we just took out equal lows, but we had more lows down here, but they didn't take those out. So that's just that's a good loss right there, in my opinion. And so you'll take losses using my strategy as well. It isn't 100%. No strategy is. But doesn't that look like a good, that looks pretty good to me. So that's my strategy. That's how I trade. I trade inverse fair value gaps. I look for liquidity to be taken. In this instance, in this case, that would have been major liquidity that you would have taken right there. You can see the chop didn't work because it was the afternoon. That's why I don't trade afternoons. I only trade mornings, but we had relatively equal lows here, right? So we took that liquidity right here. We took the liquidity, get a 5-minute inverse, and it doesn't work. But we took the liquidity right here. We slapped it twice. This is a good signature in price. But the fact that it's on the 5-minute, I don't really trade the 5-minute. Like I said, I use the 30-second, the 1-minute, and the 2-minute, and that's kind of the reason why as well. Is that sometimes the 5-minute can be a little bit misleading with inverse fair value gaps. Sometimes they'll work, sometimes they won't. Like this one. This is one. Finally get the inverse here, and it holds, it holds, it holds. It held basically the whole way, but doesn't that take a lot longer than what you'd like before it starts really moving? That's why I go on the 1-minute or the 2-minute or the 30-second, because the moves typically happen a little bit faster. But yeah, that's kind of my short explanation of how I trade. Yeah, I just wanted to make sure people knew that. So, yeah, that's pretty much it. Cool. Yeah, link in the description for the Discord that I run. Trade every morning, 8 to 10 o'clock in the morning, Eastern time, or no, Central time. So that'd be 9 to 11 Eastern time. And yeah, I'll probably be making quite a few more of these videos. So I'll start a playlist of videos for my Discord. So cool. All right, catch y'all later. See ya.